Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Good morning, the 17th of February 2015. Hope everyone had a wonderful weekend. We have special guest this morning, Jason Perkins from thebluecollartrader.com, who we're very excited to have with us. We'll have him on in just about 14 minutes or so. Certainly lots happening geopolitically, news-wise from the weekend. We're keeping an eye on very, very closely. Certainly the the proverbial Greek drama continues, and we'll get into the specifics of what's coming out of Europe with respect to Greece in just a few minutes. We have this morning the the S&P 500 futures are lower by 2.75 handles, again 2.75 points at 2090.75. We have crude oil lower, West Texas Intermediate lower by 57 cents at $52.22. We have gold lower by $3 this morning at $1,224.20. We have the 10-year above that 2% now here, folks. This is something that we have been keeping an eye on for quite some time, currently at 2.040. Quite a bit of improvement over the increase in yield over the last several weeks. We have the 30-year at 2.647. And continuing to monitor that. The dollar index DXY, the dollar index versus 10 other currencies at 93.975, lower by 0.226. The euro is higher this morning by 0.0028 at 1.1423. Interesting, considering all the news coming out from Greece and the Ukraine. So, folks, let's jump into into Friday's information just briefly. The Dow Jones Industrial Average was higher by 0.26% at 18,019.35. S&P 500 was higher by 0.41% at 2096.99. And the NASDAQ higher by 0.75% at 4893.84. So we'll get into what we feel is rather important going into these days. Certainly keeping an eye on the futures. We went over that, and the larger story there, folks, as we have been saying, is that 10-year and 30-year yield coming up as of late. Geopolitical, certainly keeping an eye on Middle East as it relates to ISIL situation. Certainly as oil has creeped up into the 50s, whether or not this will be a continued range, certainly a lot of opinions. We'll get into the technicals in just about 5 minutes with Milton. But also really out of Saudi Arabia and OPEC countries, specific on commentary, rhetoric, posturing, if you will, with respect to oil and what OPEC should do. We've mentioned this before. Coincidentally, after the death of the Saudi king, oil has been on the positive move since then. And so again, a rather interesting coincidence there. Let's get into a bit more of some of the specific headlines that are coming out from Europe. We mentioned Greece. Certainly, if for some reason, if you've been away for some time and unaware of what's happening, there's been a lot of conversation with the debt that Greece is holding and how to position their debt, their requests. So here are some of the headlines over the weekend and into this morning. Dijsselbloem states that discussions with Greece will continue over the next few days. Talk that Varoufakis left meeting early in EU. Now remember, there was a meeting in Brussels. It ended abruptly. This is the finance minister, Varoufakis, and he and Tsipras for the last several weeks have been meeting with several officials as of late in the ECB and various European heads of state, if you will, and discussing their position. Schwably says Eurogroup position on Greece is unanimous. Also, Schwably states that it is still uncertain if Greece wants a new program, also indicating that Varoufakis has failed to convince Eurogroup members. And that's something that, and again, that's something that will continue. It has been continuing. It's a consistent theme that we've been discussing that comes into play, adds color, if you will, adds volatility to the overall market. Also, from Germany, commentary about the Russian-Ukraine situation. We know that there's a ceasefire that went into effect on the 15th. And again, will that hold? Will it not hold? That's rather important. And more importantly is how the market digests all these news and what kind of volatility we can expect moving forward. And this is something that we'll have a review from Milton, and we're certainly looking forward to our conversation with Jason Perkins from the Blue Collar Trader. One other headline that's been passed around, continued conversations that rate hike in the U.S. will take place in June. So that's something that we are keeping an eye on rather closely. In the U.S., we're going to get into the economics, but first, Baltic Dry Index falls 1.1% to 516 points, folks. This is an all-time low. And this is something, an index we track on a daily basis, basically indicates the shipping activity as it relates to grain, raw materials on various vessels. In the U.S., the February 2015 U.S. Empire State Manufacturing came in at 7.78 versus the 8.5 expected. Prior was 9.95. 10 o'clock, we're anticipating the National Association of Home Builders Housing Market Index. Again, 10 o'clock is also the e-commerce retail sales. 12:45, Fed's Plus, or monetary policy and economic outlook. We always look for monetary policy discussions from Fed officials, and again, we'll see how the market responds to that. This afternoon at 4, we have the Treasury International Capital report. So again, themes for the day before we get into the technicals is continued euro volatility. Overall, we've had the dollar strength, but again, a bit weaker this morning. Oil continues to be volatile. We want to see if any of the Fed officials indicate anything on deflation risk. We have a continuation of this Greek drama. The Treasury yield curve, certainly the yield has increased across the board, specifically in the 5, 10, and 30-year, and more specifically internationally, keeping an eye on EU-Russian relationship. We'll see if the post meetings arrangements hold. And certainly we're coming into the end of earnings season, and those are central themes that we are keeping an eye on. So without further ado, let's bring Milton in with the technical analysis preparation for the trading day. Certainly, as always, lots happening in the marketplace. What's on your mind? What are you seeing out there?
Hey George. Well, basically, everyone I think is mindsets on two things. Greece and Ukraine. Um, those are the headlines over the weekend. Even this morning, continued headlines. Of Ukraine's Poroshenko saying, the pro-Russian rebels are not, adhering to any of the truth or ceasefire that was discussed over the past weekend. At the end of the week, that's going to be interesting. We all know about the Greek news. So Greece is going to be on the burner for the next few days, keeping to see if anything comes out of any of the
Bear with us.
Hey everyone, we seem to be having some technical difficulty. We'll try and get George and Milt back on as soon as possible. This is Amar, by the way. Be with you as soon as possible.
Hey folks, thank you for your patience. Looks like we are back. Want to make sure we have a good screen share for you folks. All right. So Milt, let's come back to the technical analysis. I know you were commenting on what's going on in Ukraine and Greece, of course. We'll continue to monitor that. Let's get into the technicals, if you will. I know you always watch the ES first. What kind of? Certainly, we've been in a range there. What's on your mind there?
All right, so I'll just do everything quick because I know we have someone coming up today. ES numbers to watch. We're watching. A lot of people were talking about that 2100 upside is the number to watch. So we're watching that number. Downside support ideal on a daily around 2060-65. Intraday levels we're watching is at 2092-95. Resistance to the upside with the intraday support at 2080-84. Oil, we're basically right at intraday support levels. We're keeping an eye on this 52 level with resistance around that 53, 53.50. Watching the 52 level, 51, 50, 52 level as the intraday level support. Ideal levels on that to the downside is 48 with the upside at 54, 55. VIX at the low end of support range. We keep reaching that 14, 16 support level. And the upside at 2021, we're down on the at the support round of 14. So we're keeping an eye to see if we can base here and turn to the upside, or if it continues breaking lower when the market excels higher. Gold is in the 1200, 1250 range, currently in the mid range of 1220. Watching gold, watching those two levels, 1250 upside, 1200 support. If anything breaks on that side, we're looking at the volume break as well, watching to see if it's a continuation move below that. And currencies, not much activity this morning on currencies. The dollar's a little weaker this morning with the euro strength. Kind of odd with all that's going on in Europe, but as of now, it seems that the euro moves to the upside with the dollar currency to the downside. Watching those levels, watching the correlation between dollar and oil, which is not going into play today. So we're keeping an eye on both, keeping an eye on everything, and if anything changes, we'll make sure to update on the UA app. George?
Milton, thank you very much. Folks, there you have your technical analysis prep. for the day this morning. Just to check in on the futures, we are still lower, just around where we were at the beginning of the show, just about 3 handles lower now at 2090.75. Crude oil about 50 cents lower than we were at the beginning of the program, lower by $1.05 at $51.72. So we'll continue to keep an eye on that. So, folks, without further ado, we're very glad and to have Jason Perkins from the BlueCollarTrader.com join us this morning. Jason, thank you so much for joining us this morning.
Hey, thanks, guys. Appreciate it, George.
Absolutely. It's a pleasure to have you on, Jason. So first and foremost, tell us a little bit about yourself, about BlueCollarTrader.com, and then we'll jump into markets and so forth. So please take it away.
Oh, thanks, George. Well, I'll tell you, I created the BlueCollarTrader.com really for just to empower the retail traders out there. I came up with the event calendar just to be able to pull different webinars, seminars out there that I thought might be useful to retail traders and add it to that event calendar. Education, brokers, few brokers on there. People are looking for options for brokers as well, and platforms, etc. As far as my history goes and how I got into trading, you know, ironically, I've heard this a lot, but back in 2007, 2008, when the real estate market really popped, I happened to be owning a small interior design floor covering business in Arizona, and luckily I actually sold that business at the peak of the market and came out all right, but then not knowing what was going to happen with the market, we dumped a ton of money into a new business and had the reverse effect on that one. So I had a friend in Arizona who had been trading options at the time, and he kept telling me, Jason, you got to look into this. This is, if I can do this right, I'm going to retire in 5 years, I swear. And I started laughing. I said, you actually can make money off your computer trading stocks that way? And at the time, he said yes. He had been fairly successful at it. And that's really what started the bug for me. I started looking into it. Had really nobody to turn to when it came to where do I start, who do I talk to, what educators out there do I seek out first, and eventually I took a trading course with a company called Wealth Intelligence Academy, and ironically, I think it's the Robert Kiyosaki's stock trading courses. So here I went, you know, really not knowing where to go, and I dumped right off the bat $500 for their 3-day stock course. And here's this guy standing there telling you how to buy the market when the stochastics were on the oversold, and sell the market when the stochastics were on the overbought levels. And I thought to myself, is that it? That's as simple as it gets? Holy crap, man, I'm going to be a millionaire. And you know how that story goes. You lose a ton of money and you learn some hard lessons that it's not like that. And so I thought, okay, well, I must need more education. Something's not right here. So I dumped another $15,000 into their so-called gold package, where you take a trading course, which it includes technical analysis, and it's pretty in-depth technical analysis, and then took some other courses on advanced covered calls and a couple others, trading pit and an advanced trading pit, where they got into really spreads of options in the strategic spreads that you can do. So I traded options for a little while, long story short, and didn't really like holding positions overnight. I It's if I woke up at all in the middle of the night, I would immediately go to the computer, turn it on, just see how my positions are holding up, and realized real quick I just didn't personally have the patience for that kind of trading. So I ran into NinjaTrader, a trading software program, where I saw that you could actually day trade the futures markets. You could be in and out, flat at the end of the market, and move your targets and your stops right from your screen, and I loved it. So I immediately took hold upon their software program and started trading on NinjaTrader's platform, the ES, which is the S&P 500 E-mini.
Right.
And eventually, once I traded on NinjaTrader's platform for a while, I continued my education by involving myself into the Northwestern University's Futures and Options Trading program. In that program, that's where I ran into Jeff Quinto. If you don't know who Jeff Quinto is, he's an amazing person, very, very experienced futures trader. In fact, you will see some of his risk management videos on the CME website. So he was a professor over there teaching this program. That's where I ran into him and eventually took his mentorship. Spent quite a bit of money with him as well. And slowly but surely, I ended up coming into the depth of market with jigsaw trading. That's what you're looking at right now. That's my DOM. And became a tape reader off Market Profile. So it's crazy how you start with one thing and then you end up with another, and that's really been my journey becoming a futures trader. And where once I was trading off moving averages, technically now I've just kind of evolved in this tape reader looking for volume profile setups as well as market profile.
Great. Jason, what do you trade now? Give us what securities do you trade now?
The ES.
Okay.
The ES is primarily what I watch, and I do watch the 6E, the euro, and I also watch crude.
Okay. So those are the primarily ones you trade on a day-to-day basis.
Yeah, I wouldn't say day-to-day on the 6E. You know, if I see a setup on the 6E prior to the U.S. Open and it's clean, I see quite a bit of volume on the tape trade at that level, I will participate in that level. But, you know, most of the levels that I look for happen right at the open. So that's why I really focus in on the ES. Usually I trade for 1 hour, 1 hour and a half of the ES, and I'm done. I look for the setup that happens right in the morning session, right at the open. If the tape confirms that there's size trading at that level, I participate, and then I look for the other levels for targets, and I try to be done with trading overall an hour, like I said, an hour, hour and a half into the market. I don't like sitting in front of the screen too long. I've lost money way too many times doing it that way.
And I think that's rather that's a great discipline. We always talk about discipline. We always talk about how a trader should behave during the day when perhaps they don't know what the right thing to trade, or perhaps they don't have a good entry point. So you mentioned volume profile, market profile, tape reader. Let's get into each of those individually. Tell us what is a market profile trader?
Okay, so a market profile, the typical market profile trader is looking for value area highs, value area lows. And those are all based on a cluster of volume. Now on my chart, you'll see just a TPO count. I really don't pay much attention to the volume on a market profile indicator, I just pay attention to the TPO count. It tends to clean things up a little bit for me. And for example, this area right here is very significant to me. We've got several daily pivot highs in that general area, and I will go to the tape if the market pops up into that area. If there's quite a bit of size trading in that level, for example 93 and a quarter, I have marked on my chart for an area that I'll be watching. If you were watching the ES probably about 30 minutes ago, I had this double X sitting here at 89 and a quarter before this volume bar even turned into a POC, a point of control. You could clearly see on the tape quite a bit of size hitting the bid and then ticking up and then hitting the offer, clearly showing absorption was taking place at 89 and a quarter. So I go to market profile, the TPO count, and I look for areas that are significant to me within the last, we'll call it a week. And I look to those cluster areas. So for example, you've got a cluster area here, which is also a ledge on market profile, and you've got another cluster area here, which some traders would call a value area high and a value area low. Well, that's significant based on the overnight trading. Not only that, but we have a pivot low, a daily pivot low just before that. So at 83 and a half, that could be a significant level for the market to turn to. And if there's size on the tape showing absorption, then I will take the risk and take that trade.
Okay. For our new traders that are watching this, how do you make sense of the when you read the tape? Give us an idea of what you look for, and what would make it compelling for you. How do you structure a compelling argument to trade something? So get into the tape a little bit for us.
Yeah, no problem. So for the new traders out there, this is the depth of market. Once I put my levels on the depth of market, this is what I really pay attention to. I no longer look to the chart. In the blue column, you have the resting limit orders that are sitting there. These are traders that are potentially wanting to trade. They are potentially wanting to participate in the market, and that's why you see them pulling and adding their orders. Okay? On the right-hand side in the red column, this is obviously the resting offers. So they are potentially wanting to sell into the market. And in the middle, the two black columns are the tape. Now, by default, it's not blacked out like this. I've set it up this way so that I can focus on what is happening now. I don't care what's happened in the past. I want to see what is the market doing at a price level now, what and how are traders reacting to that price level. So we're at the open right now at 89 and a quarter. I would be looking for absorption in this area, and you start to see 1,000, 1,300 hitting the bid, and then they can't move the market down, and another 1,000 hit the offer at 89 and 3/4. So clearly we see at 89 and a half right at the open there was a little bit of absorption taking place here, and it's starting to tick up and move the market in that direction. Now whether it'll hold is another thing, but we look to the volume. It's over here to the far right, and we can see the volumes tapering off. This level at 89 and a quarter needs to hold for longs to stay confident in this trade. So we may see some continued absorption here once it breaks that level, say by, I like to say really by eight ticks, 6 to 8 ticks, then it's a broken level. So right now it's holding, and the volume cluster on the right-hand side is showing that price was rejected around 89. There were no more selling into the bid, and buyers are now trying to take this market higher. So if I would have been long at 89 and a quarter based on the open and the volume I saw on the tape, my first target would be about 92 and a half, which is a pretty good ratio for a trade. And if you're a multi-contract trader, by the time you get 92 and a half fill, your stop obviously should be at break even.
Right. Okay. So no, I think that's great. So I think that's a great explanation of reading the tape. You also mentioned that so your volume, you watch the volume profiles, you read the tape, and you also monitor the market profile. Get into that for us for a little bit of time.
Okay, you're talking about the volume profile?
Yes.
Yeah. Okay, so volume profile is intraday, obviously, so you want to always be paying attention to what the market is telling you, excuse me, as the market is moving in your direction. So for right now, let's say you're long at 89 and a quarter based on that open.
Right.
Well, we've got quite a bit of absorption taking place at 91 and a quarter based on the volume profile. So there's resistance happening here, and you can actually see that. For example, if your first target was sitting at 92 and a half, and you see the market hit a level 91 and a quarter, and they keep hitting the offer, but it's having a hard time breaking 91 and a half. And here we are again, we're at 91 and a quarter. We'll go to the tape, we'll watch, we can see that they're having a hard time breaking this level, so we're going to be watching for absorption on the tape now. We want to see them buy, hit the offer aggressively, and sweep these sellers out. But they're not. 400 hit the offer, and it ticks down, 400 hit the bid. There's minor absorption there, not a ton of size, but it's having a hard time breaking that level. And if you didn't see that on the tape, what the volume profile does is it shows you that there's quite a bit of size based on this profile so far, trading at 91 and a quarter. And if you recognize that quick enough, you can typically, let's say you want to adjust your first target. You don't like the price action happening at 91 and a quarter, so you'll move your first target down, take a piece of that out of the market, and move your stop to break even, and just see if by chance it will break through 91 and a quarter and sweep those sellers out. So that's how I use volume profile. It's really how the market is trading now. What is the market telling you as you're in a trade? What is the market telling you as it comes to a level? As you can see here at 89 and a quarter, there's a step off now. So if 89 and a quarter gets breached, if they sweep these longs out by some distance, let's say 2 points, there's going to be a lot of traders looking to the step now at 89 and a quarter for a short, because now it's going to become resistance.
Right. Understood.
Support is broken.
Understood. When you're structuring a trade, you're looking at the volume, market profile, the reading of the tape. So go through with us in your decision making process. Do you use stops? Do you use what's the best way for you, especially if someone's beginning this process, how to go about structuring a trade?
Oh my gosh, if you're not using a stop in electronic trading, I'd just say good luck to you.
Okay.
That's just my personal opinion. There's so much that can happen in electronic trading. My recommendation is to always use a stop. If you're first starting out in the electronic trading futures market,
Mhm.
you always use a stop. My stop is typically in a market with a low VIX. Let me pull my VIX over here so you can see.
Mhm.
VIX right now is trading at 1605. We got a considerable gap there from the last live session. If the market is typically below 15, I would like to say as a gauge point or a price level. If it's below 15, my stops are a little bit more narrow because the market obviously is less volatile. If
Mhm.
the VIX is 15, above 20 for sure. I love it when the VIX is above 20. I get really good movement out of the market. I get a good range typically, which means you and I make money. And if it's above 20, my stops tend to be about 2 points. So I give it a little bit more room so I don't get shaken out of the market.
Okay.
So yeah, I would recommend using a stop. As the market moves in your favor towards your first target, my routine is to start eliminating risk. Start ticking up your stop and try as quick as possible to get to that break-even point once your first target is filled. That's been my routine for quite a few years.
Okay. No, I think that's great. I think for especially beginning traders, I think that's a great way of a great tutorial, and thank you for that. Um, you know, we were talking a little bit about offline a little bit about the volatility in the marketplace as of late. Certainly, January has been rather volatile. Um, Give us your opinion. Do you? Well, let me ask you this: do you only do intraday trades, or do you at times get into a little bit more on the swing trade side?
No, I typically only take intraday trades.
Okay.
Yeah,
So
my targets are fairly large. Excuse me. I'm not much of a scalper.
okay.
Uh, I have scalped. I have taken 2, 4 ticks here and there if a price level shows it, and I don't want to hold a position forever. I'll take a quick scalp. But I'm looking for longer term trades intraday. Um, if I can squeeze a trade and be in that trade for an hour and hit all 2 or 3 of my targets, that's a really good trade for me. And I'm flat. I can sleep at night.
Right. No, no,
All is well.
no, absolutely. There's a certain value in that. Let me ask you this: how are you? We talked about, you do watch the news, you do watch, what's happening globally, domestically, globally. How does that, again, I know you mentioned you really do trade, for about an hour and a half to 2 hours, each, in the morning. Um, how does news impact your trading, or does it? It doesn't have to, but if it does, how do you rationalize information that's coming through the wire? Whether it's grease, whether it's something that could absolutely affect the ES. What's your take on that?
Well, being an intraday trader, I don't have to really be all that much of a fundamentalist. And although I do pay attention to the news, and I don't trade 5 minutes before or 5 minutes, let me back up. I typically don't trade 5 minutes before the news, and I don't get back in until I see liquidity enter the market again. So the benefit of intraday trading off Jigsaw Trading's DOM here is you can see liquidity right before your eyes. And typically at news events, that liquidity starts to disappear and the market gets extremely volatile.
Sure, it gets
So I stay
wasted.
clear of that. Yeah, and as soon as I see the size that was trading before news enter back into the market, my game is on again.
Okay.
Um, the reaction from the news typically happened already. Now I go back to my levels and see if those levels are going to hold once liquidity enters back into the market.
Understood.
Um,
Understood. So
I
what you so it seems as though you watch how the news impacts liquidity specifically within the market internals, and then you structure a trade around that.
you got it. You got it.
Got it. No, I think that's great. That's great. Um, so as as we're going into the 9:45 time, we have ES now down about 6 handles, 2087 and a half. Um, are you anticipating one of the things that we'd like to get a kind of a feel of from our guests is certainly volatility has been huge as of late. Are you anticipating that to continue for the foreseeable future, at least on the intraday?
Yeah, I think so. I believe the market is going to continue to give us some decent range and some decent volatility going forward. In fact, I think the volatility will only increase going forward, especially with everything that's going on around the world. As you spoke earlier, George, about the Greece thing, let's face it, there's so much money that has been printed in our systems. Eventually, I think this bubble's going to pop. We're going to see some selling into the market once the asset bubble does pop. Um, but short term, uh, right now we're caught in a range.
Right.
We're going to get some movement off the highs, off the lows of those ranges, those pivot highs and pivot lows, and whether we go higher from here and test the figure of 2100, that's a good question. I was really excited when the market was just shooting like a rocket towards 2000. And here we are just about ready to test 2100. The market continues to amaze me and just go further up, up, up. It's
Sure.
crazy.
Sure.
But yeah, the news doesn't really affect me all that much. I just continue to watch the tape and those levels and follow my plan.
Absolutely. No, I think that's it's an important note there, Jason. Any anything that you're looking out look out into the. I know you're again intraday trader. Anything that you're seeing on the horizon that may impact volatility, impact volume. I know it's a little bit of a macro question, but anything that you can, any words of wisdom, any additional words of wisdom for our listeners and our viewers as we head into the rest of 2015.
You know, I think 2000 and everybody's expecting at least a pullback macro because we've just been continuing to go straight up ever since the recession of 2000 and the recession of '08. There's some pretty decent sized pullbacks from those recessions, and we're so far above those two pivots. For me to believe that the market is going to tank and for whatever reason just give up all those gains, but I don't know. I think we're in a bull market. If we get a pullback, we're going to get continuation of buying, and unless we really break those support areas of those two recessions, I'm not a believer that the market is really going to sell off anytime real soon. Um, I'm hoping the VIX will stay, closer to 20 in my personal opinion, because it's better for us traders. It's better for volatility. If the market gets back down to that 12 and what we were trading at for so long, 14, 12, you just don't get the range that a trader wants. So hopefully we'll keep above. I always watch the VIX. If the VIX can just stay closer to 20, we'll get the trading typically we want to see. And that's I guess all I really can say is as far as a macro point of view on the markets.
Absolutely. Thank you, Jason. Folks, so this is Jason Perkins from the bluecollartrader.com. Jason, thank you so much for joining us this morning. It's been an absolute pleasure. We hope to have you on again on Unusual Activity. Jason, thank you so much, and we wish you a great day and a prosperous day as well. Thank you for joining us.
Hey, thanks, George. I appreciated being here with you guys.
Thank you, folks. So Jason Perkins, folks, from the bluecollartrader.com on Unusual Activity. Folks, before we let you go, let's run through some of the numbers we're seeing this morning. So a little bit of we have a little pullback from initially in the initial levels on the ES, currently down 6 handles now at 2087.75. We have the crude oil lower by $1.38 at $51.40. We have natural gas lower by 0.047 at 2.756. Heating oil at 1.9513, lower by 0.0201. On the natural gas side, certainly we had a little bit of a tick up last week for a few days with respect to weather, and that's something that we'll continue to keep an eye on. We have gold lower by $14.80 this morning at $1,212.13. Certainly, at least beginning to point towards that 1,200 mark. Silver lower by lower by 85 cents at $16.44. We have the 10-year higher yield now again at 2.056. Really getting into above that 2% mark. So again, we're keeping an eye on that. We have the 30-year at 2.662. So folks, thank you for listening to Unusual Activity, powered by FinancialJuice.com, with George Avedon and Milton Marmonides, with special guest Jason Perkins from the BlueCollarTrading.com. Thank you for joining us. Have a great day. Good hunting.